What's up, guys? It's Brian from Hashware Hub. It's about 8:35 a.m. March 14, 2018. We got a trading video coming to you about Bitcoin. But first, before we get involved here, if you're new to us, hit that subscribe button, hit the notification bell, DTube, Steam it, also subscribe there. That'd be greatly appreciated. And also on DTube and Steam it, if you can upvote us and re-steam, would be greatly appreciated. So we'd go over a lot of technical analysis here. And we're getting more and more into trade setups. I'm communicating a little bit more how I go about trade setups and stuff like that. So if you're interested in that, I would go ahead and hit that subscribe button. So let's get right into it here. So we've been talking about this for a few days now, possibly this sell-off, if in the event that this whole thing is counted as this bearish count. Remember, the bearish count, again, if you're new to us, the way we're counting this, our bearish count is this 1, 2, 3, 4, 5. Okay, truncated fifth right here. Okay, and now we're looking at this as maybe possibly a large A, B, and a C. Right, so this would be 5 waves down. This would be 3 waves up, and then it would be another 5 waves down right here. Okay. There's other ways to count this too, like a WXY or WXYXZ. And we'll get into that, later on. But regardless, it doesn't really change. It really doesn't change all that very much right now. So let's go ahead and take a look a bit more closely. We were looking at this as an A, a B, and a C. Somebody asked, why am I looking at this as an ABC? The reason, because I think this is part of a corrective wave coming down of a larger ABC, right? So that's why I'm counting this as an ABC. You can also, count this as, an ABCDE. You can count this as a 1, 2, 3, 4, 5. I mean, you can count this all sorts of different ways, depending on what your outlook is on the market. And so that's one of the reasons why we're looking at this as an ABC. If it's a 1, 2, 3, 4, 5, then it's a 1, 2, 3, 4, 5. Then we're looking at this as basically the first wave coming up. And I didn't think this was the first wave coming up. I don't think that at all. I mean, if we come down a little bit lower, it's pretty much gonna breach all this, and then it's definitely not a first wave up, and then we know what we got. So let's take a look at the resistance and support lines that we had drawn. So 4-hour resistance line, we've been saying it's 9,653. We're going to go ahead and change that, but before we go ahead and do that, I want to talk about this, a previous 1-hour resistance. And again, this is the reason why I mentioned it last night. I think I mentioned a few other times before. This is the reason why we like to keep these things up a little bit, because the market remembers them. The market has infinite memory. All right? It may sound a little odd to you guys, but the market has infinite memory. It remembers more than you ever could. It remembers more than a computer really ever could, because even for algos and for machine learning and stuff like that, they don't dump in all of the information into the market, right? So the previous 1-hour resistance was right here, right? But then the market tried to come back up again, right? And it tried to hit this previous 1-hour resistance. Didn't come close at all. It stopped at the top of this trend line, right? The top of this green line right here, which is the top of that wedge. Right, which leads me to believe that we are back inside this wedge handedly, that the market could not break above it. Now, also, I kept on mentioning for some time now that we are having a significant reduction in volume, right? And then here, look, so significant reduction in volume. Remember that for a sec. Now here, look what we have. Look what we have. We have large sell candles coming right in, right? Large selling candles coming right in. The market just couldn't take it anymore. It just fell off. This bearish flag is totally in effect, no question about it. All right. So the market couldn't get above this green line. It knew that it had this previous 1-hour resistance, right? It also knew that what was also chopping this market down was the 55 EMA. Right, it just couldn't get out of the way of a 55 EMA. The 55 EMA was like a gnat or a fly, flying around its head. That just won't give up, right? And it was just bugging the shit out of the market. And so finally, the market just said, piss off, I'm out of here, and it went to the downside. For me, the only direction this could have gone is down. Will it continue to go down? we'll see. But the only way that this thing could have gone down was the only way this thing could have gone for me was to go down. I don't explicitly say that all that much in my videos, because I feel that people then take that as a holy grail, and they don't do their own homework, and so on and so on, and they don't understand the risks that are associated with that. So that's why I'm a little bit more middle of the road as far as my videos are concerned. But they are always, you know, tilted one way direction or direction or the other, but not drastically, right? So yeah, so the market went ahead and it just dropped right off the bottom of this bear flag right here that we had drawn for some time. All right. So where could we get to, right? Oh, the next thing I wanted to show is that, yeah, so the 1 hour support, right? So this was the actual 1 hour support, right? So this 1 hour support, you know, again, the market kind of came down right on top of it, right? This is on a 1 hour chart. The market came down right on top of it, and it starts beating away at it, right? Continue to beating away at it like a jackhammer, and eventually just broke right through. All right, this is what these 1 hour supports are excellent for, and same thing with the 4 hour, but obviously on a different time frame. So, you know, like I said on my last video last night, is that if I would be looking to get into a short position, I would be looking for the market to kind of pierce through here first, right? And my objective would be for it to kind of get around to the bottom of these candles right here. So even if you were to go ahead and kind of take this trade, I think this trade is about, let's say this is about 9100. This is 87. Let's call it about 5% pickup, right? You know, from here to here. Hey, that's an awesome trade. Even if you were a little bit more conservative, you could have gotten a 3% pickup right now, and you could have gotten out of the market pretty quickly. So clearly, it makes sense why the market has stopped right here. We have a bunch of congestion right here. The bottom of the wicks right here, right? It's scared to go down any further, right? But let's go ahead and look at this a little bit on a more explicit basis as far as the Fibonacci retracement tool is concerned. So imagine this is a one wave right here, right? And then the top of the two is right here, okay? Where are we going to get to? Where are we going to get to? So the three wave can never be the shortest, right? It doesn't have to be the longest, but it can never be the shortest, okay? So right now, if the three wave were to be just as long as the one wave, well, then the market would have to come down to about 8,332, right? It's stopped much higher than that. It hasn't even kissed the 0.786, okay? So it's it's less than 78.6% of the first wave. So it doesn't mean that it has to move further down from here. It just means that the fifth wave has to be shorter than this wave right here. Okay, so we may have a little bit of a correction, you know, here, and then the third wave may come down a little bit further. We're gonna have to see. Regardless, you know, I'm happy with this trade, and I mean, basically I'm predominantly, you know, out of the majority of it. So. And whatever's left over, I have a stop loss that's gonna ensure me that I don't take a loss on it. So, you know, that's where we are right now. The Laguerre RSI, we've you know, we're in oversold territory. The regular RSI, you know, it's not even in oversold territory, which leads me to believe that we have more to go. Now let's just go ahead. I had this up here before. I want to go ahead and just put it up here again. But let's say, for example, that we have the same extension on this wave right here, right? So let's say this A, this B, and the C, where could it get down to? About 6,553. Excuse me, 6,563, right along here, all right? Now, it may stop at this red line. It may stop at this red line, which is above it, right? This red trend support line, which we've been talking about for some time, right? Comes all the way from back here, okay? Comes from all the way back here. So it could stop there. So in the meantime, let's go ahead and update these resistance lines. So the 1 hour resistance line, we're changing it to 8,953. So it's going from support to resistance. Reason being is because the market is down. It's as simple as that. 1 hour resistance, 8,953. Okay. So if the market is to come back up again, it has to obviously go through this 1 hour resistance. If we're going to get a correction, right? Let's say this is the the third wave coming down. I would look to see possibly that the market would come back up. Now, if the market were to come back up, remember, hold up a sec, right? If the market were to come back up to here, right, all the way up to here, then we pretty much have a breach of the wave one, right? If this is wave one right here, right, and this is this whole thing here is 2. This is the high at 2 right here. Then we would pretty much have a breach. So, in the event that you think that possibly this thing may continue to go further and you wanted to get in a really aggressive type of trade, you would look for some sort of a retracement that comes to the bottom of the 1. You see what I mean? Yes, we can go into the wick. We can go into the wick. That's not a problem, okay? You would look at more of the bodies, right? So there are other ways to kind of count this thing, but right now I'm holding on to this right now. I don't want to confuse things a little bit too much. So that's a 1 hour resistance. The previous 1 hour resistance, we're going to go ahead and we're going to delete that for right now. Okay, 4 hour resistance. 4 hour resistance is 9,077. Now the candle has not closed on this one. Okay, so this may change. This may change. And what I'll probably do in a few hours, I'll probably change this or make an update on our Facebook trading group. Okay, resistance 9,077. So the market to come back up here, the 4 hour resistance and the 1 hour resistance are pretty close together, right? I mean, they're pretty close together. So for the market to come back up here, it would have to go through quite a bit, right? And also at the same time, we also have this green line. This red line that's coming down, is a red line that I drew from here to here, thinking, well, maybe if this thing were to break above the green, that it has to run into the red one. And if it runs into the red one, then it may possibly come down, okay? It's just another thing I was drawing. I'll leave it up here for now, for maybe another day or something like that. Let's just see if it makes any sense, or the market adheres to it. If it doesn't, we'll just take it down. The daily is basically the same. The daily resistance is the same. Let's go ahead and take a look at it on the daily candles. Actually, let's look on the 4 hour candles really quick. Yeah, not really much to say. We were oversold territory on the Ligera side. We popped up. Now we're kind of going sideways. Yeah, so one of the things, I like to look at candles all the time, but this whole thing right here just tells me indecision. And that's the same thing it should tell you too. Okay? And we had a nice up candle right here, right? Trying to get to the top of this trend line. The top of the descending wedge, excuse me. Then we had this bearish engulfing, and that should really just make you like quiver. All right, it's different. It's different than here, right? So here, first of all, the body is not engulfing the green candle before it. First of all, second of all, there's a huge wick on the bottom, a huge wick on the top, so it doesn't know where it's going, right? Or here, there's no wick on the top. There's a very little wick on the bottom. It's a large body, and it's definitely a large body, in consideration with the body before it, and especially with regards to the bodies even well before it. Okay, so it handily engulfs the candle before the bullish candle before. So this is another signal, just saying, something's going on here, right? Let's look at things on a daily basis real quick. So on a daily basis, we are below the 200 moving average, right? 200 moving average right now is 9,066, right? And we're well below it. Our close right now is 8,703.94. So we're well below it. If there were bulls here, we would look to go ahead and the market would try to get back up to this 200-day moving average. right? 9,066. So a 9,066 on the 1 hour chart. What does 9,066 look like? 9,066 is right here, right? Just about at the 4 hour resistance. The 4 hour resistance is about $11 higher than the 9,066. Okay, so this 4 hour resistance actually means a lot, right? Because it's also coinciding with also the 200-day moving average. So it's a strong resistance. So yeah, let's keep it there for right now. If you guys have any questions, let us know, and happy trading.